Why don't we start off with China? When we see tariffs come into play, what does this mean for China and Chinese equities? By the way, today, factory orders hitting a 12-month high. How should investors view that news coming out of China?
Yeah. First, I think the biggest concern and risk to China equities is about risk premium. And this we have seen across the board, not just for China, also for a lot of EM equities, given that the tariff, U.S. trade war tend to raise the risk-off mentality. And that also lead to potentially weaker currency of those emerging countries. So I would say the biggest impact in the near term for Chinese equities are the risk premium. But if you look at the fundamentals impact in terms of the tariff, near term, I would say that it's still kind of manageable from China perspective, given that they already prepare for this trade war even before I think the U.S. administration changed the post. So in addition, China also has quite a bit import from the United States. So they could have some risk management from that perspective. And then secondly, Chinese fundamentals from domestic side also start to see some gradual improvement. And that actually start to show through some corporate earnings. And therefore, we see some year-to-date rally of Chinese equities. Okay. Therefore, it's a complex kind of situation right now.
All right, Vivian, let me ask you another very quick question. We're going to move on to some other nations and other emerging markets. Chinese stimulus, do you think that's fully priced into Chinese equities, or is there more upside from that stimulus going forward?
I think at this point, market probably expect pretty moderate stimulus. We have seen that in the past couple of years that Chinese government tried to do more gradual, more kind of a measured stimulus. So for example, we see recently some support to consumption, whether it's appliances, whether it's smartphone. So I think this will be same kind of step or measure going forward. But as I said, that we have seen some gradual improvement of some corporate fundamentals, especially for some internet companies in the recent times. Okay. So going forward, I think the corporate earnings will be the key to watch.
All right, let's hit some of the other emerging markets that a lot of people are focused on right now. Vietnam is one that's very interesting. I cover logistics. I know a lot of logistics companies have moved hubs to Vietnam because they expected production to move to Vietnam. How do the tariffs change the investability of a country like a Vietnam and some of the other areas where production is moved to, like in Indonesia, like a Bangladesh?
Yeah. And this is a very interesting point, given that Vietnam is one of the largest trade partners of the United States. And more importantly, there's a big trade imbalance between U.S. and Vietnam. And then exports to the U.S. account for nearly 30% of Vietnam GDP. Therefore, the impact on Vietnam would be very high. But on the investment perspective, this is a relatively small equity market. For instance, we don't have direct investment in Vietnam equities as of now. So I think the impact from global equity market perspective will be a little bit limited.
Okay. What about these so-called dirty 15 that the administration's been talking about? One name that really sticks out to mind in me is India. Obviously, again, a growing hub of production, a nation that's not only tried to attract production, but has also tried to attract services businesses, especially in tech. What is being added to the so-called dirty 15 potentially mean for people that want to invest in India?
Yeah, those dirty 15 names, actually including both emerging countries and also developed markets, basically the top 15 trading partners of the United States, and with also a pretty large trade imbalance, and also more importantly, the tariff differential. So India is one example. It has a trade deficit from the U.S. perspective, and also the tariff differential is probably one of the largest among all the top 15 countries. So it is kind of a risk. But on the other hand, the exports to the United States and total export of India only account for about 2 to 3% of the country GDP. Therefore, from the fundamental impact on the GDP perspective of India is not very substantial. This is, again, back to what I talked about earlier. It's more about risk premium, especially India equities. It's a pretty high valuation, and therefore tend to be at a higher risk. And we've seen that yet today, as you show on the screen.